The financial crisis that took place over a decade back really shook the global financial systems, and for 6 to 7 years following this, all the central banks have come together to print liquidity to escape the wrath of what had befallen. Brent Johnson and Robert Kiyosaki have spoken in depth about this in the dollar milkshake theory, which we shall be taking a look at in a while. So as we're saying, the central banks started to print liquidity till around the end of 2015. They stopped this practice in 2016 and started raising their interest rates till around the year 2019. This was a total game changer as it changed the stance of the markets as well as the global economy. The interest rates that were charged on the dollar dropped, but despite them dropping, they still are much higher than the interest rates charged on the currencies in countries such as Japan, Turkey, and even in Europe. This is probably due to countless factors such as the US having the largest military presence, the dollar payment system, the global reserve currency system, and rich capital markets. Due to all these factors, the liquidity that exists is sucked up. In short, the world runs on the US dollar, and whatever happens to the dollar affects the world. People have noticed the boons and banes of having the dollar as a currency in which the entire world depends. They have tried to change or even alter the power that this currency has. However, it's too late and quite hard to make significant changes at this point in time, and focusing on how to benefit from it is the only thing that people should think of. Amidst all of this, the concept of the dollar milkshake is spoken about quite frequently. So what exactly is this dollar milkshake theory? According to the dollar milkshake theory, the global central banks have created a milkshake with all the liquidity that they printed in order to ease the monetary needs. Due to this, around $30 trillion has been injected into the system since 2008. Now, how does the dollar milkshake theory work, and how does it have an effect on various global affairs? Though strong countries such as China and Russia tried to diminish the value of the dollar, the majority of the trade that is conducted is still transacted in USD. Not only do China and Russia conduct their trade in dollars, but so do the rest of the world. So when USD is used for various investments all over the world, the money flows right into the USA, and the money also has to be paid back with interest. In short, the dollar milkshake theory deals with the various dynamics around which the demand for dollars exceeds the supply. As we speak, the world is drowning in sovereign debt as well as dollar-denominated corporate debt. This may pose as leverage at the moment, but in the long run, it definitely comes with quite a few repercussions. In fact, if these massive loans cannot be paid, a sovereign debt crisis would take place. But it's also important to note that this massive demand for USD can be used for both trade and debt repayment, and according to Brent Johnson, would lead to the strengthening and siphoning off of liquid USD in global markets. Brent Johnson has also stated that the value of the dollar will rise quite drastically against all the other assets during the sovereign debt crisis. In addition to this, it'll also suck up the liquidity of all the other global currencies. This will result in global capital flowing into the US while the value of the dollar rises. This means that the American markets will have plenty of liquidity by then, and a massive credit contraction would be observed. This would take place because the US financial system has a long and vast history of deep liquidity and stability. In fact, there has been no country so far that has such a robust capital market that can support the global economy. This underpins quite a few institutions and makes the USD a safe currency. Due to this reason, during tough conditions, investors end up investing in the USD as opposed to weaker currencies that may or may not be backed up by the unstable government regimes. To summarize, if a country is vulnerable such that it may fall into a crisis, the smart thing for them to do would be to print more of its currency. But they must also ensure that it is done in the right proportion, as if they print too much. The trust in the currency would be lost, and so would their value. If they can't print more money, they must cut cost. But this could provoke tensions as people would stop attaining the benefits that they were receiving before. After the dollar milkshake-style financial crisis, more people are highly likely to adopt the USD as their base currency due to how strong the US government is. In fact, 65 countries worldwide have already adopted their currency as the USD. This could be in the form of having it as their official currency, like how it's done in El Salvador or Zimbabwe. Or it could be done by pegging their currency value to the USD, as done in Hong Kong and Saudi Arabia. This in turn makes the USD and its assets systematically significant. Brent Johnson has also stated that a debt crisis or other systemic financial crisis could result in a currency crisis that would force the USD to establish itself as the world's reserve currency. All of this would take place due to the population having an excessive household, the high number of government debts, and corporate issues. Many consider the USD as the gold standard of currencies worldwide. Speaking of gold, why do people prefer to invest in the USD as opposed to gold? The value of gold varies from region to region. According to many experts, there will be a point in time when both the price of gold and the USD will rise at par. But as of now, these two assets continue to remain enemies in the eyes of investors. Moreover, gold has more value than the USD in the free market. But due to the influence of various factors such as the government, its value is controlled. So yes, the world is printing plenty of money and are all flowing into the USA. Once it flows into the USA, it doesn't stay in the form of cash or capital, but is in fact invested in a variety of ways. The USD is converted into assets or investments such as dividends, stocks, or even invested into items such as electric art that appreciates in time. It's also important to note that global debt is calculated in dollars, and the debt has also to be paid back in dollars. As of now, the US has a debt valued at around $23 to $25 trillion. The global debt is equivalent to this value too. Amidst this, the interest factor plays a huge role as it further worsens the debt situation. However, the USD does boost the US economy as well as other tangible assets, but the monetary system that's currently in place is not suitable or designed for the USD to get stronger. In fact, it could wreck the entire global economy as well as put the entire world in a tough position. Though the FEDs try their best to bring the value lower, the effects in such a case would be quite catastrophic. The solution for such a situation is writing debts down or even introducing a new currency. This would in turn reset the whole financial system that would cause the USD to lose value. This means that assets in other countries such as Canada, Australia, Argentina, or even Turkey would be discontinued, and many will rush to invest in these assets while the value of the dollar depreciates. This shows the true value of cash flow. If the cash flow is regular and good, it's great for the USD. But if the cash flow is irregular, it would only depreciate the value of the USD. Right after COVID, deflation was observed, following which inflation took place. This was due to the high amounts of money moving into the US. So eventually, the USD will touch an all-time high, while the other currencies drop in value or return back to what their value was pre-COVID. If stocking up in dollars is not an option, stocking up on gold would be the next preferred form of investment. Many also seem to be investing in Bitcoin, but this must be invested only if one has spare capital at hand. After all, Bitcoin and such cryptocurrencies witness extreme results where their performance is all or nothing. What are your thoughts on the value of the USD and its value in the future? Do you think the dollar milkshake theory is apt to use in such a situation? Blast the comment section with your thoughts. We hope you found this video informative, and we hope to see you back on our channel soon. But before you go, do drop this video a like, tap on the subscribe button, and hit the bell icon to be in the loop on what's going on here. See you soon.